All right, well, good evening, everybody. Good afternoon, wherever you are in the world. Welcome back to another live stream. Tonight we are standing right behind Carnegie Hall on 57th Street. Well, we're on 56th Street now, but we're going to be going to 57th Street, Billionaires Row. This is the Carnegie Hall Tower, which is actually apartment complexes as well. But on tonight's live stream, I wanted to talk about something pretty important. Now, I'm not sure if this is just an anomaly as it pertains to me and my network of people. However, I want to know what you guys think. So we're going to be talking about this today. So I've been noticing a huge uptick in layoffs. Twilio today, we had about 11% of the workforce unfortunately be laid off. Patreon had their entire data security department unfortunately laid off as well. And it's not just isolated to those two specific companies, it's more broader based. So we're going to talk about, is this an industry trend? Do we think there's going to be more layoffs coming down the pike here? And how widespread is it going to be? Now, a few streams ago, we were talking about how many of the investment banks, such as Goldman Sachs particularly, are going to be also laying off some of their employees, but I'm not so sure we could quite call Armageddon just yet. I mean, obviously we reviewed that in 2021, I would say late 2020, early 2021, and throughout the remainder of that year. IPO activity, M&A activity, and investment banks actually had record years in 2021. Now IPO activity has fallen off a cliff, down about 97%. So normally there would be some fat trimming, if you will, to use that analogy. So we'll talk about it, and we'll also talk about some things that, unfortunately, if you were laid off, what are the next steps, right? We can't just sit here on the couch and feel bad for ourselves. We got to stay in the game. We got to keep pushing forward. So we'll talk about some things that we can do to spruce up our resumes and potentially even start your own business. But before that, everybody, we have to say hello to all of our friends in the chat. Hopefully you had a fantastic Wednesday. I see Melissa White. Good to see you, Melissa. Welcome. I see Brian says, hey, Tom. NMB045 says, Tom, happy midweek. Thank you so much, NMB045. Ireva says hello. The ABX girl. Gibson is here. Big Task. Austin, City Limits. Lilla. My good friend Chris Beeman. Welcome, Chris. Trust you're well. I see our good moderator, Sunshine After Rain. Kevin says hello from Cincinnati. Joni QQ says hello, Walks on Wall Street. Good to see you, my friend. Kathy Lyons, Patricia Ivory. Jay is here cooking. Alec says good evening from Chicago. Welcome everybody from Illinois. GX72, Raphael, Sela Q says, hey Tom, my husband and I watch you almost every night. It's our mini New York vacation. Hey, awesome. Love that. Thank you for watching. So we're on Billionaires Row tonight. We're gonna cross the street. Hopefully we won't get hit by any vehicles tonight. But look, I've been noticing a serious trend here, and it reminds me almost a spitting image of 2020. Because in 2020, I would wake up, I would have a flood of email notifications from LinkedIn. Everybody posting about how unfortunately they, were laid off, lost their job, were fired, however you want to call it. And I'm seeing a lot of that right now, like a lot. Mainly as it pertains to tech companies. But what I've been noticing about these particular tech companies is the roles that they're laying off or cutting, at least from what I'm seeing out right now, tend to be the customer experience roles, customer success roles, and managerial roles. So let's say if you're managing a sales team of account executives or enterprise account executives, strategic account executives, a lot of those management roles are being trimmed. Now, obviously, to me, this says that a lot of businesses out there are very, very skittish about the future of the economy. Now, we went over this statistic that I believe over 270 companies in the S&P 500 that reported earnings mentioned the word recession. So this was a record, an all-time record high. So I think what businesses are going to do is they're going to look at their operations and say, hey, look, how can we trim the fat here, so to speak theoretically, and how can we tighten up and streamline our operational efficiencies? Because usually what happens is during economic booms, right, we had a massive pull forward in growth, especially if you were working in banking, if you were working in tech. Just the migration to the cloud specifically, and that transition from traditional on-premise infrastructure to cloud computing. So if you were selling platform as a service, SaaS solutions, you probably had the best year of your life in 2021. 2022 is still strong, but forecasting that growth out, ooh, this guy, man. Not to get off topic, but I've been seeing a lot of I was talking with one of my buddies today. I've been seeing a lot of people just very carelessly cross the street. It's almost like they don't care if they get hit by cars and bikes and stuff. You guys got to be careful crossing the street. I mean, jeez. At least wait for the light. But anyway, I think we had a lot of pull forward, right? So what happened is, naturally, to keep up with that demand, businesses had to start hiring like gangbusters, right? I sort of remembered from COVID, it was this almost like I like to consider it like pulling a rubber band, right? There was massive amount of layoffs, and then the whole market shifted to the other end of the spectrum so fast. Businesses were adding headcount like crazy. And a lot of times when they do that too far, too fast, when that demand fizzles out, you no longer need those employees. So we'll talk about it. We'll see if this is going to be a sustained trend or not. And then we'll go into some tips to maybe, revamp our resumes, or even if you want to, use this time to start your own company. Hey, Mustafa is here. Good to see you, Mustafa. JL is here. Welcome, JL. Thank you for being a good moderator. We are walking down Central Park South, 59th Street, as we head towards Columbus Circle and the Deutsche Bank Towers. Roy S. is joining us. Good to see you, Roy S. Deborah S. is here. Welcome. Yeah, Deborah's like, he had the white walk sign. But I mean, you still gotta watch it. You'd be surprised at how many people in the city have been blowing red lights, especially a lot of the mopeds. So we've been having a big problem in New York City with a lot of these unlicensed and unregistered, like dirt bikes and ATVs. And these guys and girls crush through the red lights. So you just gotta be careful out there. A good friend of mine sent me a video of a really bad bike accident. It was a collision between a city bike and I think just like a regular, it may have been a motor scooter, I forget what it was, but really bad collision. So yeah, just be safe out there. Oh, look at this. So if you guys look all the way in the distance, I think it's that roller skating meetup. So I think every Wednesday night, this group of roller skaters over here meets up and does a whole entire tour of the city. Maybe we'll meet up with them again later on in the stream. Austin City Limits is here. Welcome, Austin. Hopefully you're well. Beautiful looking dogs right here. Hey, Paul says, yup, saw it. Nasty, good to see you, Paul. Hey, Letitia says, can't wait to move to New York next year. What part of New York are you moving to? I'm assuming Manhattan. Hey, SP says, hey, Tom, it's a good time to jump to must-have SaaS/platform as a service solutions. Use the time to also get certifications to upgrade your skills and resumes. SP, I think you hit the nail on the head there, my friend. Because I think, and correct me if I'm wrong, but here's what I've been seeing. It seems as if a lot of kids, especially when they just graduate college, they'll just take any job that they can get, right? You're happy if you graduate college and you're like, oh my God, I'm gonna go work in New York City at a startup, right? And you know, any job offer these guys throw at you, you take. That's not the way to do it. And here's why. If you don't interview the company that you're interviewing for as much as they are interviewing you, it's probably gonna turn around and bite you over the long run. But really quick, just so you guys know where we are, this is right outside the Trump International Hotel and Tower here. This is on the northernmost side of Columbus Circle. And adjacent to the Trump International Tower, you could see the very famous Deutsche Bank Towers, formerly known as the Time Warner Center. So if you remember back a couple streams ago, we were down on Wall Street, and I showed you guys the Deutsche Bank all shuttered, all closed up. And I think that was the last standing original investment bank. Obviously, Deutsche Bank is the German bank. Last standing on Wall Street. A lot of the major investment banks have migrated uptown towards Park Avenue, Times Square, and now here at Columbus Circle and 59th Street. Hey, Sally is here. Says, hey, Tom, I'm here enjoying your live streams. Good to see you. So anyway, what I was saying is, I understand that a lot of people get very jumpy when they're interviewing with a particular company. Okay, I get that. It's exciting that you're going to land a job. Maybe it's with a no-name startup that could potentially one day grow into a very, very profitable company, go public on the stock exchange, in which case your equity is worth a whole lot. Now, that is the goal, right? But what I've seen all too many times, and especially what I've seen during COVID, is a lot of people that take that big risk of joining a startup. Maybe a lot of these startups have very, very little revenue. Maybe they have an idea, they have a vision, they're VC backed, they just got a bunch of capital injections. But you gotta understand, if you are not interviewing your interviewer as much as they are interviewing you, you're not setting yourself up for success. You need to be asking the right questions. Okay, what is the projected revenue growth of said company 5 years out? What is the path to profitability, assuming the company's not profitable right now, and when do they expect to be profitable? Right, these are all the questions you need to be asking, and I'll tell you why. It's very easy to raise money to continue to fund your operations during a raging bull market when rates are low, okay? VC money is gonna be sloshing around out there, and especially if the company goes public and stock valuations are very, very high, well, the company could just sell stock to raise those funds to then pay employees, hire additional people, and the like. But what did we see during COVID, right? When a lot of these very high beta, very frothy no profits, and pretty much has no clear path towards profitability. I mean, if for anybody that knows how to read financial statements, what happened to a lot of these companies? Well, their stocks got clocked. I'll use Peloton as an example. I'm not just picking on them, but when their stock price goes down 70-80%, they could no longer sell stock to fund their operations, thus the mass layoffs, right? So it's so important to make sure you're applying to profitable businesses. Now, you could apply to a startup that has a great vision. They don't necessarily have to be profitable, but you just need to know in the back of your mind that you are then in turn increasing your risk for being laid off and not having that appropriate job stability. And I think a lot of people, when they come out of college, very seldom do they ask those type of questions. It's sort of like you're just chomping at the bit. You're so excited you got the interview that you'll say yes to any offer. And I think you got to hold your ground here, sort of dig your heels in and have some confidence to also interview the interviewer back. Because at the end of the day, you are investing the most valuable thing you have into this prospective employer, and that is your time. So if the person who's interviewing you can't give you a comprehensive and clear answer on what are the trajectories of the company, what are the revenue forecasts, when will they be profitable, do they have a clear path towards profitability, what percentage of their sales force is hitting quota, whatever it may be, if they can't give you a clear answer to that, I would definitely pass. And the reason why we're talking about that tonight is because there's been a wave of layoffs across the board in the tech sector specifically. But if you notice the particular companies who are having the brunt of these layoffs, is the very unprofitable tech companies and the unprofitable startups. So just wanted to throw that out there. Hey, walking commuter, says you're interviewing them as much as they're interviewing you. Yeah, I would totally agree. And that was walking commuter. Walking commuter, good to see you, my friend. So to walking commuter's point, this is also in and of itself going to, and as we talk about a lot, as we talk about sales, this is going to reframe the interview. Like, sales is a lot about framing things, right? You need to frame it in the correct way. So when you're interviewing somewhere and you come off and present yourself that you have a set list of questions ready to be asked, you're inadvertently going to increase your credibility. They're going to be like, wow, this guy or girl is prepared. This person knows their stuff. And most importantly, they know how to build a business, right? Especially if you're applying to a lot of startups. A startup's goal is to grow into a profitable, prosperous, sustainable business. So those particular people want to hire people who are business savvy. Hey, Nirvana Fan 500. Welcome, welcome. Clarence Jackson says, if you walk across the street, I will use my flashlight to wave at you. I'm not sure which way to walk across. But Clarence, awesome, man. I didn't know you worked up in this neighborhood. This is one of my favorite neighborhoods in the entire city, right near Lincoln Center. But Clarence, thank you so much. I'm gonna look out for the waving flashlight. I'm gonna look out for it. Let me cross the other way. We'll see if we can see you. Oh, Clarence Jackson says you're on top of the Smith. The Smith is a great restaurant, man. Let me see if I can see you. I'm gonna cross the street and turn back around. But now we are outside of the beautiful Lincoln Center on a beautiful night in Manhattan. Hey, PDC says, hi, excuse me. Somebody, the LT Pride says, did you hear about the trend of applicants hiring someone to attend a job interview in their place? No, oh my God, I haven't heard of that. That's insane, dude. That's insane. Let me see here. Hey, Buff20 says, hey Tom and chat, how is your day? It was a good day, very busy day. You know, we're making progress at work. Deals are rolling through the pipeline as we head into the end of the quarter. So can't complain, definitely can't complain, my friend. Dan Zhang is here. Says, what do you guys do when you have a really bad day? I'm about to pop a bottle of whiskey, which is a bad idea. Yeah, it's definitely a bad idea. So I think that's a good topic of conversation, and here's why. So I was on a call with one of my friends who runs a hedge fund. And he has these weekly calls with all of his different hedge fund managers in his industry, right? And one of the things that they said that really caught my attention, hold on, I'll show you guys the very famous Lincoln Center fountain. One of the things that my friend said that really caught my attention as it relates to the hedge fund business, and I think it applies to life as well, because investing money, trading money is all psychology. At the end of the day, you should never allow your team or allow yourself to spend more than one day celebrating a huge success, or spend more than one day relishing in a loss and beating yourself up on a major loss. And what this will force you to do is focus on the process and run your process and stick to your process. Because a lot of the times, and you can apply this to any sort of aspect to your life. This hotel that we're looking at, by the way, is the Hotel Empire, the Empire Hotel right outside Lincoln Center. But one of the things that this will do is to force you to focus on your process, right? And in the investment business, it's all about controlling your psychology, controlling your demeanor. So if you have a bad day, which everybody has bad days, I have horrible days. You know, being in sales, maybe I lose deals. I've lost multi-million-dollar deals before that I was slated to make, you know, $100,000 worth of commission on, and I lost the deal, right? So if you stick to that principle, only let yourself sort of sulk in that sorrow for a day, and then you got to snap out of it and continue to run your process. The same thing as if, you know, let's say you make a good trade, right? Or you're having a 200% year, you're killing it, like many of us did during COVID. Or let's say if you're in sales, you close a big software deal and you're slated to make a monster commission. You should only really allow yourself to celebrate that for a day, and then it's right back to focusing on your process. So if you run the process and if you wake up and you do it every day, your emotions tend to soothe themselves out, and you're not going to beat yourself up if you have a bad day, and you're not going to get too irrationally exuberant if you have a great success. So that's one of the things that I do. Hold on one second. But that's the advice that I would give. But anybody else, I'm curious to what you guys would think as well. Walking Minnesota says, I worked under a great leader who had worked on some very famous marketing projects. And I was talking to him one day about how cool it would be if he said only matters if can do it again tomorrow. This is Walking Minnesota. Love that. Mike says you're only as good as your next deal. Dusty Cole says Tom is so wise for 27. Jay says talking layoffs, the recession is going to last longer and get deeper. Hold on, my chat is messed up a little bit. Give me 2 seconds. Hey, GN Workstations. I do the same. Arnold's is not gonna lie, bro. Jiu-Jitsu makes you feel pretty great. Yeah, Arnold, that is fantastic. I actually just started doing Jiu-Jitsu, and you're entirely right. I think you need to do something outside of work, to Arnold's point, that is both physically challenging, or you need to put your body through not only mental adversity, but physical adversity as well. And I think rolling jiu-jitsu really helps. I mean, it was a huge eye-opener the first time I went to my, first jiu-jitsu class. It was like, I don't really know how to explain the feeling. You just feel so exposed that I don't know how to explain it. It's almost like in the moment when somebody's tapping you out, it's like you realize that somebody else is controlling the fate of your entire existence, right? Because at the end of the day, there's a very weird trust that you have to have in your opponent when you're rolling jiu-jitsu. Because if they force you into submission, you're like, oh my gosh, if this guy decides not to let go when I tap, you probably can kill me, right? So I guess just to have that trust, it's just weird. I don't know how to explain it. I've only gone to like 4 or 5 classes, but that's sort of my main takeaways. Hey, Ramp 5 is here. This is hello from Astoria, Queens. Good to see you, Ramp 5. We are now on West 66th Street in Lincoln Center Station, where you can get the 1 train downtown. We're actually gonna walk over a little bit. We haven't been to Central Park in a while, so. PB on the go says hello to all. Love the New York City strolls. Good to see you, PB on the go. Welcome, welcome. Villain 181 says you're near my BBJ place. Awesome. Vinny Castellano from Staten Island is here. Good to see you, Vinny. Yeah, Dow Jones says emotion will get you wrecked. ETH merge day. That is correct. So there's a big news out of the cryptocurrency space. Ethereum will be merging from their proof of They're merging from their proof of work to proof of stake. I'm not too big of an Ethereum guy, but definitely a big catalyst nonetheless. PB on the go says I'm behind on what the stock market did today. Not a lot of action in the market today. I think yesterday was the big day. Obviously, that inflation report came in hotter than expected. Now, did anybody know that yesterday, supposedly, there was like a big celebratory event at the White House celebrating the Inflation Reduction Act? And ironically enough, we got a freaking monster inflation print, especially on the core side. Now, not to get political, I just think that's a little bit ironic. I think everybody, no matter what side of the aisle you're on, it's a little bit ironic that we get a horrible CPI print, especially that core CPI, which is what the Federal Reserve looks at. And on the same day, we have this big celebration that we passed a huge spending bill. That's probably gonna ramp up inflation even more, but anyway, I'll digress. But I think the overarching theme, which we sort of covered yesterday, is don't fight the Fed, right? Don't fight the Fed. Now that we got that hotter than expected inflation report out, what's probably gonna happen? The Federal Reserve is going to go longer and harder with raising interest rates. I think within the next 2 weeks, they're going to increase the amount of bonds that are gonna roll off their balance sheet, I believe to the tune of $90 billion. And I think that should account for about 0.3% additional hike to the rate or in relation to the velocity of the impact it should make on markets. But at the end of the day, we're in a bear. We are in a bear market. All the major indices like the Dow Jones Industrial Average, the NASDAQ, the S&P 500 are all well below their 50-day and 200-day moving averages. And there's only really one group within the market that is doing exceptionally well, and that is solar. And we'll talk about that in a minute. Hey, Scott says this is Howard Stern's building. Is it really? Scott, I think Howard Stern has a massive place out in the Hamptons too. I think he has a massive estate. Ramp 5 says don't fight the Fed and don't fight Thomas Lee of Fundstrat. You know, Tom Lee gets a lot of heat, but I like Tom Lee a lot. I think he's a very, very smart guy, and I respect him a lot. Jonathan Richards is here, says, hey Tom, good to see you, Jonathan. Welcome. Grand Street 1 says on both CNN and Fox, they broke into Biden's speech to announce the bad news and the big drop in the market. Yeah, I tend not to be too keyed up on politics, so to be honest, I didn't even know there was an event yesterday. I had zero clue that there was an event, I guess, celebrating the Inflation Reduction Act, if you will. I heard it from a friend. I didn't even know what was going on. GGNYC says, yep, he does love Howard Stern. Yeah, he's a Long Islander too, so usually any of the very successful, iconic New Yorkers always have a big place out in the Hamptons. Now, I think Billy Joel, I'm not sure if he has a place in the Hamptons. I think he has a place in the North Shore of Long Island, on the Long Island Sound, I believe. But I'm not sure about that. Maybe you guys could fact check me on that. Hey, the British Grey is here. Welcome. Good to see you from Tampa, Florida. Hopefully you're having a fantastic day. We are actually walking up the Upper West Side tonight. And the reason why I wanted to come up here is because it's a lot less crowded and noisy than Midtown. And also, I wanted to show you guys some of the original brownstone buildings that I tend to like quite a bit. You know, one of my favorite things about the Upper West Side is all of the blocks are aligned with trees, especially here from about 68th Street, 69th, all the way up, I would say as far along as 98th Street. So there are these really nice, quiet, quaint blocks. It's very, very different than living in a place like Midtown, where we always walk around. I bet you guys could tell the difference the second you join the stream. It's just a different vibe. It's just a very, very different, slower pace, if you will.
Balancing act.
So I think if you have, let's say you have kids or something like that, probably better to live in a place like the Upper West Side, because not only are you in between Central Park to the right, but if you actually make a left, you can see Riverside Park too, which, you know, on some days is actually my favorite of the two parks. I'm not sure if many of you, obviously the New Yorkers in the chat have probably been to Riverside, but if you're visiting New York, if you're a tourist, I know everybody says go to Central Park, you gotta go to Central Park, but I think you actually may have a better experience going to Riverside. It's very unique. Sunset Blue says, I love the Upper West Side. Agreed. Big Task says, Tom, do you have an interest in art? I do. I've been getting into it a little bit, but not like a huge art collector or anything, but I do have some interesting pieces. Arnold is here. So Tom, I just finished Professor DeModoran's valuation. Anything more you can recommend? Wow, so you got through the whole course already? That's pretty good. Okay, so I'll give you a book that is similar in nature to the style of investing. Obviously, Professor DeModoran is more of an academic, right? So he teaches you the fundamentals of securities analysis, of corporate finance. I think what would pair very nicely with that is a particular book called Margin of Safety by Seth Klarman. Okay, so Margin of Safety by Seth Klarman. And here's the reason. Oh, I thought that was an accident. I've been seeing a ton of accidents lately. And here's the reason why I recommend this particular book, Margin of Safety by Seth Klarman. And this is for all the value investors out there. Now, a lot of the times on the stream, we'll talk about, you know, growth stock and tech stock investing. But I also think it's appropriate to shed light on this style. So at one of the, wow, this actually looks like a really nice restaurant here. I've never been, I may have to check it out. Love the outdoor dining setup here. So at one of Berkshire's main investor conferences, if you will, somebody raised their hand and had asked Warren Buffett a question. And that question was, besides yourself and besides Benjamin Graham, who would be another investor that you would recommend for all of us to pay attention to learn from? And Warren Buffett, he paused for a moment It was a very awkward and long pause, and he couldn't really think of anybody at first. But then, all of a sudden, he said, you know, I really wouldn't want to recommend anybody but me and Ben Graham, but if I had to recommend somebody, it would probably be Seth Klarman. Yeah, maybe Klarman. And then later on during the conference, he actually referenced Phil Fisher. And Phil Fisher obviously was the founder and CEO of Fisher Investments. And he actually also went on to write the very famous book. Anybody who works on Wall Street, I'm sure you've already probably read it a million times, but it's called Common Stocks and Uncommon Profits by Phil Fisher. So I always like to recommend those two specific books. Now, I will say this. If you try to go out and buy a copy of Margin of Safety by Seth Klarman, you're probably not going to be able to buy a physical copy because the book runs you about $3,000 to $5,000. And the reason for that is because Seth Klarman only published, I think, 1,000 to 5,000 copies. However, you can access this book for free online because there's PDFs of that particular book everywhere. Now, I gave you guys the PDF for free. I believe I dropped it in the Discord. I'm not sure, maybe one of the moderators could help me out. But I either put it inside the Discord or I made it a Nightbot link, but I just forget what the Nightbot command is. But quick intermission, this is one of my favorite coffee shops here. It is called Black Press Coffee, and it is on the corner of 72nd Street and Columbus Avenue, right here on the Upper West Side of Manhattan. And also, in addition, real quick, before I get too sidetracked, we are very close to the very famous Dakota Apartments, which is where, unfortunately, John Lennon did get murdered back in the day. Oh, Wendy England says it is in the Discord. Okay, so if you want the free PDF to that book, it's in the Discord. Now, I'm not sharing stolen material. The guy only published 5,000 copies, and you could pretty much find this PDF of the book on like Wall Street Oasis and many other websites. But if you want to read an additional book that is a little bit easier to process, I would recommend Common Stocks and Uncommon Profits, and here's why. So the book Common Stocks and Uncommon Profits by Phil Fisher is sort of going to be a similar read, maybe a little bit easier of a read as to like a One-Up on Wall Street by Peter Lynch. They have a very, very similar style of investing. So if you're familiar with Peter Lynch, who was the former Fidelity Magellan Fund mutual fund manager, one of the greatest investors or mutual fund managers of all time, he is now since retired. Definitely check out that book. If you go on Amazon, you could probably get these books for like $3 or $4 used. So if you're on a budget or something like that, maybe you're in college, spend $6-7 or go to a used bookstore or something, but Amazon used books is a lifesaver. Hey, Cindy Foley is here. Tommy is here, says go to Big Nick's. I'm not sure where Big Nick's is, Tommy. Where is that? Hey, FredX is in Strawberry Fields near Dakota. Hey, it is. Strawberry Fields is near the Dakota. You know, I might as well take you guys there now. I'm not sure if Mark Davis is in the chat, but Mark always likes when we go here. Yes, so Dan Zhang says, Tom, my favorite book till this day is The Market Wizards. It's a great motivational book if you want to get involved in the financial markets. 100,000% I agree. Also, another particular book that I would recommend that comes from Market Wizards. So essentially what Market Wizards is they interview all of the best investors in the world and they compile their stories. So I would read all of the Jack Schwager books. Now, if you guys are interested, and I get this question a lot, and we actually do have somebody in the chat that's really, really advanced with options or equity derivatives, whatever you want to call it. I believe he used to run equity index options for Bank of America. I'm not sure if he's in the chat tonight. Stanley, if you're here. But if you're interested in learning about options, In one of the Market Wizards books, they highlighted an individual by the name of Anthony Saliba. So I'll say that again, Anthony Saliba. So if you're interested in learning about options, how options pricing works, if you want to learn about all the Greeks, like your gamma, theta, vega, rho, all that good stuff, delta, and really how options pricing works, I would buy, I think there's two specific books by Anthony Saliba, but I think since Anthony Saliba has left Wall Street and started his own derivatives exchange in Chicago, focusing on Bitcoin derivatives, I think. But Anthony Saliba is very, very famous options trader on Wall Street, and I would highly, highly recommend all of his books. Yeah, Arnold says 12 hours left to the ETH merge. It's a good day. All right, so all of our Ethereum experts in the chat, what do you guys think about that? Do you think it is going to be a positive catalyst? Do you think it's going to be a disaster? What do you think? Dan Zhang says the whole series of it, Market Wizards, the new Market Wizards, the unknown Market Wizards, and the Market Wizards hedge funds. Yeah, so to Dan's point, I think the two favorite people that were highlighted in Market Wizards, in my opinion, is Anthony Saliba, and number two would be, oh, this is the Dakota, by the way. I'm rambling. I know you guys don't like when I ramble, but this is the beautiful Dakota. Look at the architecture here. But they also highlighted a trader by the name of Mark Minervini. And Mark Minervini has sort of the same style that I do, or I should say I have sort of the same style that he does. You know, a very CAN SLIM driven investors business daily focus. But this is the very famous Dakota. It looks beautiful. And this is on the corner of Central Park West. So if you look all the way to the end of the block, you could see the very beginning entrance of Central Park on 72nd Street and Central Park West. Hey, War Walker, good to see you, my friend. Mike Skate TV. So I've been to a building like that. I think my favorite thing about the building is these original, I guess you could call them oil lanterns or oil lamps. Maybe if I cross the street, you guys could see it a little bit better. Hey, Vonda Howard, good to see you. Hopefully you had a fantastic Wednesday. Ramp 5 says, Tom, I'm holding off on Ethereum, much like you are waiting to enter once it breaks its highs. I think that's actually probably appropriate. You know, as you guys know, I tend to be more of, I think you guys know my stance on a lot of the cryptocurrencies. I think the vast majority of them will go away. Not only because they'll go to zero, but I think they'll probably be made to go away. We'll let this ambulance cross. Because I think the vast majority of them are probably going to be categorized as securities. And we've had many streams outlining why, or why I think why. And I think Gary Gensler over at the Securities and Exchange Commission is going to really hammer down the gauntlet here very soon as it relates to those particular alternative coins. Martin says, Tom, do you think Yoko Ono still lives there? Well, supposedly she still does. I think she lives on the top floor now. I'm not too sure. I'm not a huge Beatles type guy. I think that was a little bit before my time, but definitely still an iconic landmark and very special to the city and the world too. So I'll cross over the street so you guys can see it a little bit better. Okay, Wendy England says she does. Okay, copy that. So apparently she still lives here, which is good. Samantha R, the one and only, good to see you. Welcome, Samantha. See, I think we'd have a pretty, I would say a better view if the scaffolding wasn't up, because obviously if you put scaffolding up, you have to put all the floodlights on. But let's see, maybe if I can get out of the light, you guys can see the oil lamps or the gas lamps a little bit better. Let me know in the chat if the picture's coming out clear. Hey, Armored Knight says, hey Tom, how's it going tonight? Things are going good. You know, real quick, everybody, another thing I wanted to talk about, and I wanted to get you guys' opinion on this. So supposedly, and we talked about this a little bit yesterday, but you know, railroads are planning for a massive strike here. And I think Amtrak, starting tomorrow, is going to essentially shut down all of their operations. So if you're trying to get a train on the Amtrak, I don't think that's going to be possible tomorrow. I think they're starting to shut things down for the strike. So does anybody, maybe if you work for a railroad, or maybe you work for a chemicals company, or really any company that has to deal with that sort of, deal with the railroads in general for transporting goods and services, number one, how widespread do you think this is going to get? Do you think that the unions are going to broker a deal relatively soon, or do you think this thing's going to be a drawn-out process? And the reason why I say that is because if you think about it, what has been one of the largest drivers of inflation that I think everybody can essentially agree on? Now, I know it is money printing. I know it is fiscal policy in addition to monetary policy, but I would also argue, and I think everybody would agree here unanimously, that supply chain disruptions and shortages have really done a number on inflation. So as I've been reading a lot of these Wall Street Journal articles, Bloomberg, Market Watch, one of the things it says is a lot of the very, let's just say, important materials like your fertilizers, like chlorine, you know, sometimes importing and exporting and transporting steel and food for cattle. A lot of that's going to be shut down here over the next couple days. So, you know, I'm not sure if this is just alarmist talk to sort of get clicks, or does anybody have an in where you're like, no, this is real, this could be big, and the unions are probably not going to come to the table to bargain here. Armored Knight says, just a coal train goes by my house daily called the Jessus Run Express. Tom G says, Iowa corn, Nebraska soy, late summer. If it affects freight, the military will be called, probably nationalized. What? Jeez. Harry says 60,000 union members might walk off on Thursday night. So that's what I heard Amtrak is going to shut down too. So Naive Smile says, no, it's real. Yeah, I definitely know it's real. I think the question now is it going to be a big blowback and ramifications? And is it going to have, oh my God. And is it going to have a material impact on inflation? Because one of the reasons why food prices are so high is because of fertilizers. So if anybody was long a lot of the fertilizer stocks during 2021, you probably doubled your money, if not tripled it. Because fertilizer has been going gangbusters. So if fertilizers go up, then obviously food that you farm also has to go up, which compounds the inflation problem. So if the necessary fertilizer isn't getting to the locations, if this is like a 1 or 2 day strike, fine, it's probably not going to be material. But if this progresses, this could be bad. Vonda Howard says, Tom, DC to Boston on Amtrak will stay up, all others won't. Okay, copy that. So I wonder why DC to Boston will stay up and all others won't. That's interesting. Hey, Settings is here. Says, hey, good to see you, Settings. Welcome. Oreo says, Tom, are you expecting to get ETH? So I sort of said my piece about the whole merge, but I'm going to be honest, I'm not too keen and caught up to it. I think you guys know my sort of stance on a lot of these altcoins. The vast majority of my exposure is to Bitcoin. I have a very, very little amount of Ethereum. But at the end of the day, for a lot of people that I've been hearing is going to say, oh, the ETH merge is going to be fantastic. It's going to make transaction costs be a lot lower. Because one of the main issues right now with Ethereum is the gas fees. I won't sort of get too super technical here, but it's just ridiculously expensive to send Ethereum, to buy anything with Ethereum. So, I mean, hopefully the particular merge will solve a lot of that, but I wouldn't call myself an expert. Bitcoin, on the other hand, we could talk about. Hey, Eric's only long-haul Amtrak is going to shut down. Copy that. Ryan Royals is loving all these dogs on the stream tonight. Yeah, Ryan, we're on the Upper West Side, so it's more residential, I would say. So more families with dogs and kids and things like that. So definitely a big difference than being in Midtown. So Denise Ebby says alcohol was real sick like tobacco. Zabatata says most goods are transported by truck, but there will be no doomsday, but there will be problems within the industry specifically. Yeah, so that's sort of what I'm thinking and banking on, to be honest. I think you're probably right, Zabatata. Tom Barry says it depends on the track age. Some passenger trains use freight tracks. I assume the Boston to Washington is different. Okay, I didn't know that, Tom, so thank you for saying that. You know, I think we can become oblivious sometimes to just how much product is actually transported by rail. You know, you think, freight, cargo on rail is something from like the 1800s, but we still rely on it quite a bit. Yeah, Norris says, I miss living on the Upper West Side. It's so charming. Couldn't agree with you more. So this is a pretty good Italian place called Parm. So Parm, famous Italian. I would recommend coming here if you want like a hero, like an Italian hero sandwich, something like that. Like a meatball hero, something like that. I think this place is good. 2 thumbs up. Jordan says Amtrak owns the tracks on the DC to Boston corridor, which is why it is still running. Okay. Copy that. Thank you for that, by the way. I did not know that. Yes, Samantha R says, congratulations on 20K. Yeah, guys, real quick, I appreciate it. I believe on last night's stream, we have now surpassed 20,000 subscribers to the channel. Never in a million years had I expected that the stream would grow this large. So to everybody who's been participating, joining in the chat, sharing your ideas, and joining in the conversation, you guys are amazing. And thank you for being here. It means a lot. This is something that I look forward to throughout the day. Definitely look forward to streaming after work. I've been learning a lot, and I think we're growing a great group here. So thank you so much. Lisa's Thomas says, what is happening in America, all around the world with inflation, rail strikes, etc. So Lee, I think in times like these, it is very, very very easy, I should say, to get extremely pessimistic. Extremely easy. And I was talking to my good buddy today, that I always sort of, bounce ideas off of. He's much older than me, much wiser, so he sort of guides me through these crazy times that we have in the market. And one of the things he said that really stood out to me is during times like these, when markets are down, markets are extremely volatile, people are losing their jobs. Earlier on the stream, we were talking about how I've been seeing a wave of layoffs on my LinkedIn, and it just seems like everywhere you look is a negative story, right? Russia invading Ukraine, energy prices going up, CPI is going up. If we dig deeper into the CPI, we're seeing rents go up. It seems like nobody could really catch a break, but if you look back throughout history, during those particular times, this is what my friend said. He's like, we usually start to see this. He's like, so when I used to have access to the Investors Business Daily subscription feeds, so one of my good buddies who runs a hedge fund, he actually used to see the statistics of how many subscribers to the Wall Street Journal, Investors Business Daily, Barron's. And what he said was, I would chart that data. And what you saw is that during times of a raging bull market, everybody's making money, there's no wars that are breaking out, the trajectory of subscriptions is taking off like a freaking Elon Musk rocket ship going to Mars, trying to colonize it. But when times are tough, layoffs are happening, the markets are either choppy, stagnated, inflation is ripping, those subscriptions of Investors Business Daily, Wall Street Journal, Barron's, they nosedive right at the time when you're supposed to be digging deep and really, really paying attention. So here's what I'll say. When things seem ridiculously crazy, which they are, when there's bad news everywhere, now don't get this confused with advice to say, oh, that means you should start buying things, right? No. What I'm trying to say is, this is the time when you need to dig deep and get in gear. This is the time when you need to be staying late at the office, putting in the work. Because when you build during these times, and when you're in tune and pay attention to the market, you're going to be the first one to catch the wave when the market turns. And this doesn't necessarily only have to be in relation to buying US equities, right? It can be in relation to maybe you want to start a business, right? Maybe you want to get another job. Maybe you're just laid off. Now is not the time to be complacent and sit around. Whoa, look at the news studio. Now is not the time to be complacent, to sit around, sulk and pout and say, oh, woe is me. This is the time to attack. The people who are getting out there now and getting after it, if you fast forward about 5 years from now, I guarantee those people are going to have extreme success in anything that they do, because they were building during recessionary times. So I think for anybody who's listening right now, you know, if you're feeling down, you got to dig deep here. Okay, you got to be paying attention. You got to be reading the papers. You got to be screening and building your discounted cash flow models and all the specific companies that you're watching, and keeping your buy lists extremely fresh. You need to be joining every single investor day at the companies you watch. You need to be listening to every single earnings conference call. You just need to be going all out. It's sort of just like you need to be taking the opposite side of the trade as everybody. As everybody's throwing in the towel and quitting, you got to be doing the opposite. So that's sort of what I would say for that. Yo, Charlie Richardson is here. Good to see you, Charlie. Welcome. Clarence Jackson says you are walking right by my church. Oh, so this is the, yeah, I know what this is. Hold on. Yeah, this is the Jesus Christ of Latter-day Saints. Is that correct? Let me see. I want to make sure I'm not mispronouncing the name. Yeah, this is the Church of Jesus Christ of Latter-day Saints, right here adjacent from Lincoln Center. Very nice. Very nice. Hey, Neva Smile says that's why I've chosen nursing for a trade RN for life. Love that. And thank you for your service, by the way. We need good nurses. So you are definitely doing God's work. I appreciate you, my friend. Thank you. Hey, Charles Hong says, hey, Tom from DC. What's up, Charles? I see my friend Bit of Wander. Welcome, welcome. Dusty Cole, good to see you. 3T3 says it's never a time to be complacent. Always go after whatever it may be. Agreed. Yeah, Katie says recession or healthcare is not recession proof. I think in some specific areas it may be recession proof. We got an ambulance coming through here. Hey, Norris, it's Tom. I used to live on West 63rd Street in Amsterdam. Wow, this is a really nice location to live. 63rd Street in Amsterdam. Let me see. This is 65th. All right, we'll walk down to that. Might as well. Okay, so you were next to like the Smith and everything like that. Wow, you were right across the street from Lincoln Center. That's awesome. But everybody, if you're enjoying tonight's live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We tend to go live about 5 days per week between New York City and Miami, and we'd love to have you along for the ride, joining in on the conversation, so thank you so much. Hey Irene, this is greetings from Forest Hills. Stay safe. Love Forest Hills, so that is in Queens. You know, Forest Hills is also, I would say, if you're gonna move to New York, a lot of times I'll get emails saying, hey, I have kids. Oh, this looks pretty new. Looks like this is gonna be some sort of an Italian bakery here. But a lot of times people will email me and say, hey, I have kids, I'm moving to New York City. What are some good neighborhoods to go to? Now, back in the day, it used to be like the West Village. I would sort of pull back on that, in my opinion. I won't really go into why, but I would strongly consider, if you want to be in Manhattan, I think the Upper West Side is the place to be if you have kids, because it is very fun up there. Also very quiet, and you're in between not only Central Park, but also Riverside Park. But number two, I would actually recommend Forest Hills. If you want to be in the outer boroughs, maybe a little bit less expensive. And also, if you want to get into the city relatively quickly, you don't even have to jump on the subway. You could just jump on the Long Island Railroad. There is a LIRR station right there in Forest Hills that'll get you into the city in usually only 2 stops. Usually it stops from Forest Hills, Jamaica Station, maybe Woodside, and then Penn Station. But sometimes you could get a train right from Forest Hills to Jamaica and then Penn Station. Luna Lee. Funny. Yeah, Dan Zhang says so many people are moving to Forest Hills or Kew Gardens. So do you think that's why, Dan, why do you think that is? Do you think that's because Long Island City is just getting so crazy expensive that everybody's, getting pushed out further? Because I remember you were telling me that your rent almost doubled in Long Island City. Irina says, there you go. It's a Mazel Tov situation. Right there, my friends. United we stand. Thank you so much. Clarence Jackson says, great taco cart. I'll have to try it one night. Blues Rider is joining us. Says, isn't Forest Hills always the name for a cemetery? I'm not sure. I am not sure, but good to see you, Blues Rider. Blues Rider, tonight we were briefly talking about all of these layoffs that we're seeing. So I'd like to ask the chat, because I don't think I had asked yet. Are you guys seeing a similar thing in your network or your professional network? Obviously, the big news today is that Twilio is laying off about 11% of their workforce. We already covered Goldman Sachs and sort of why there's going to be mass reductions at the investment banks. But is anybody else seeing this? Because I sort of like to keep my perspectives open. A lot of the times you could, get a lot of confirmation bias if you're only looking at your particular network. And obviously a lot of my network is either in tech or in banking. So I'm wondering if you guys are seeing the same thing. Any of your friends or colleagues unfortunately getting laid off? Dan Zang says lots of people are moving to Forest Hills, Kew Gardens, Rego Park, and Elmhurst mainly due to cheaper rent. Yeah, rent is getting out of hand, dude, here. Bit of Wonders says my day job is in food. It is in growth mode. Well, that's good. That's good news. Thank God. Hey, Valerie T. Cross. Thank you so much for the $5 donation. I appreciate it very much, and thank you so much for the support. Clarence Jackson says, Tom, JP Morgan and Bank of America started. They are not laying off yet. Okay, thank you for that insight. I know Goldman Sachs has started, or they're starting to pass out those notices. L Twiz says, I'm not really starting to see it in my industry. I'm in power generation like Con Ed. Oh, well, then you're definitely in high demand, man, which is good, thank God. Robert says mostly tech companies are laying off because they aren't getting VC funding anymore. Robert hit the nail right on the head. I think that's the comment of the night so far. So Robert is exactly 100% correct. And so Robert, this is what we were talking about at the beginning of the stream, and I want your insight, so I'm glad you're here. At the very, very beginning of the stream, we were talking about the importance of, especially if you're just getting out of college, right? Because when you're fresh out of college, it almost seems as if any job offer, like you're chomping at the bit to accept that thing. And that's not what you should do. You need to be interviewing your prospective employer just as much as they're interviewing you. Because what a lot of people did, especially leading up to the pandemic, is they took a lot of jobs at very super high growth tech companies that had very, very little revenue, huge amount of VC funding. But to your point, once that VC spigot gets turned off, once interest rates start to go up, especially, let's talk about it like if you're a publicly traded company, right? We'll use Peloton as an example as we overlook Billionaires Row here. When the stock price is at all-time record highs, they could sell stock to raise money to pay employees, invest in research and development, things like that. But the first particular stocks to fall when interest rates start to rise are always those negatively earnings, no earnings or very little earning tech companies. Because as interest rates go up, the future value of their prospective earnings are now worth less in today's dollars, right? That's why many people on Wall Street will build those discounted cash flow models. You plug in the discount rate, and then you could evaluate the company's future cash flows. So a lot of those companies got crushed. So if you're just coming out of school and you're interviewing with a company, you should be asking them, okay, what was your revenue last quarter? And what was your revenue target for last quarter? Are you profitable? If not, what is your laid out thesis to become profitable? Is there a realistic expectation or a path to profitability? Because it's important for you to know that, right? Especially if you're, joining a startup or something. Because the moment the economy has a little bit of a hiccup, those are the first companies to get fleeced. So you really need to know what you're getting yourself in for. The other piece of advice I'll give is if you want to stack your odds in favor of potentially not getting laid off, you need to become almost irreplaceable. Your productivity needs to be so high that you need to become like a shining asset to your company, that when you have your performance reviews or anything, the higher ups or the management is pretty much thinking to themselves, there's no way that we could ever lay off this individual, or it would make a material impact to our company. So increase your status, increase your skill set, and also, especially if you're in a revenue generation position, like sales or something like that, if you are consistently the top 15% or a performer in the top 15% of the sales force, no matter how bad the economic downturn is, FredEx, we got random shrieking. No matter how bad the economic downturn is, if you are in the top 15% of account executives, enterprise account executives at your company, you will pretty much always have a job. And that I can almost guarantee you. Hold on. So that is sort of, that's the piece I'll say there. Hey, Clarence Jackson says, I work in sales. As long as I perform well, I should be good. Yeah, 100%. 100%. So to Clarence's point, as we were reviewing that Bloomberg article about the Goldman Sachs layoffs, did you notice how the article was worded? They said the bottom 5% of performers at the company are going to get the boot, right? So if you're doing your job, if you're excelling, if you're an asset to the company, you should be fine, but you need to know your risks going in there. And I think you need to understand if, you know, you're working for a company that is burning massive amounts of cash. FredX, good to see you, my friend. Love it. We're at the southernmost Avenue. This building, and there's a particular on the live stream. I think this guy's trying to go the wrong way, which is why you need to be careful crossing the street here, because he's going on a one-way, and this is not good. Name of Datadog, ticker symbol DGOG. Their New York headquarters is based out of the New York Times building. Shadow Shock says, worry about skill development, F the company. I agree with that for the most part. I do. Definitely agree with that for the most part. So now we are standing right below 220 Central Park South, as well as Central Park Tower. Hey, Clarence Jackson says, I just resigned to JP Morgan. I'm at Merrill now. Well, congratulations. Hopefully it was, I'm sure it was a promotion. Definitely on to bigger and better things, my friend. Congratulations to you. Love to see that. Keep winning, please. Oh, we're buffering? Yeah, I think we may be in a dead spot. Let me cross the street. Let me know in the chat if we're still buffering. I may have to restart the stream. There's always a dead spot at the south end of Columbus Circle. I may restart it real quick. Let me see if it gets any better over here. Yeah, Clarence Jackson, Ken Griffin does live here. I think he has the top 4 floors. So Clarence, I think that Ken Griffin from Citadel Securities just set the record for the largest purchase of real estate in Florida. I think he paid $100 million for that estate, which is wild. Explode V2 videos. This is, are they laying off IT specialists? I'm trying to think if I saw any. So how about this? I'll tell you where I'm seeing the most layoffs in my network. And in my network, I'm seeing a lot of customer success positions, customer experience positions, and a little bit of SDRs, like the sales development representatives. I've been seeing a little bit of that, as well as management positions. All right, so now we are on 57th Street, Billionaires Row. If you look all the way down, this is 432 Park Avenue. Very, very controversial building here. I think there's a massive civil lawsuit. A lot of the residents are suing the developer of the building. Destructionist, no way, dude. Yeah, this is a really nice shot. So we are standing outside of the famous Central Park Tower, and we are looking eastbound on 57th Street to the one and only 432 Park Avenue. But this is actually the entrance of Central Park Tower. Just look at how tall that thing is. That thing is insane. Could you imagine living on like the 100th floor of Central Park Tower, or way up there at 432? You know, I was watching a YouTube video. I think it was by one of the top real estate sales guys in the city. I guess you could almost say in the world, right? Ryan Serhant. I'm sure everybody's heard of him. But I was watching a video he put out of this building, and he was doing a tour of the, I believe it was the top 2 floors. And when it's cloudy in New York City, sometimes your apartment is literally above the clouds. So it'll be totally clear above the clouds. And then when you go down to street level in New York, it's like raining. It's like the most bizarre thing ever. It's insanity. Unique, but insane. Hey, the RT440 says the Central Park Tower is insane. It's my favorite building on Billionaires Row. I think it's probably top 2 for me. For some reason, I really like 157. And 157 is this building. And this is the original Billionaires Row building that kicked off the entire trend. And I believe Michael Dell as well as Bill Ackman. So Bill Ackman is the hedge fund manager of Pershing Square, which we were actually talking about Bill Ackman a couple streams ago. Hey, Marcy is here. What's up, Marcy? Good to see you. Trust you're well. Gail Arnold is here. Clarence Jackson says Central Park Tower is the tallest residential tower in the Western Hemisphere. So Clarence, I did hear when we were doing our live streams in Miami, there's going to be a massive development called the Waldorf Astoria, which is going to be even taller than Central Park Tower, and it's going to be in downtown Miami. Now that's going to look ridiculous when it's built, because for anybody who watches those Miami live streams, the buildings are built so close to the water, because obviously Miami sits at or below sea level. So it's just like, it's like nothing I've ever seen before. And it's supposedly supposed to break ground this year or later this year. And it is supposed to be the tallest building south of One World Trade Center, or the tallest residential apartment building. Yeah, Clarence Jackson's like, I hope it doesn't sink. Me too, dude. You know what really freaks me out? And we were talking about this last night on the stream. San Francisco really freaks me out. I think the Millennium Tower, now granted they probably fixed this already. Here's another shot of the Steinway building. Now Millennium Tower in San Francisco is quite literally sinking into the ground because it is literally built on landfill. And that's why I think I'm against the idea of extending Manhattan. Did anybody hear about this? I think one of our viewers actually brought it to our attention. Supposedly, they're in talks to extending Manhattan all the way to Governor's Island. But I'm not so sure how that would work out because, you know, look what happened in San Francisco when you filled in some of the bay. The buildings are quite literally sinking into the ground and could fall over. So I don't know if I'm too keen on that idea. What do you guys think? You guys think they should extend Manhattan? Yeah, Marcy's like, I've heard of that plan as well. I mean, look, I'm not an engineer, so I'm not gonna claim like I know anything. But I don't know. If it works, fine, but I'm not so sure. I'm a little bit skeptical. Yeah, Caddy says, isn't Florida in the same boat with sinkholes? Totally. But here's the thing, the vast majority of sinkholes in Florida are actually on the West Coast. So places like Tampa, Florida, not really in Miami. Roger Fitz says they'll anchor it into the bedrock. Well, that's the thing they tried to do in San Francisco, but the Millennium Tower was still sinking for whatever reason. But everybody, this is 157 right here on Billionaires Row. This is, I would say, probably my favorite building on Billionaires Row. So on the right side, you actually have the Park Hyatt. So the Park Hyatt shares all the amenities with the actual residents. So the first entrance on your right is the hotel. The second entrance is actually where the tenants live. Now, this entire building has a beautiful restaurant, beautiful lobby, state-of-the-art workout facilities, and also, I believe, a salt water pool. It's just insane. And I think the residents of the tower can use all the same amenities as the hotel. So quite the experience living there for sure. Napa 1231 says, hey Tom, Landon Battery Park is man-made. Is it really? I didn't know that. I know they extended some of it because in Lower Manhattan it used to be like all beach, like literal, it used to be sand. But I did not know that. I didn't know Battery Park was extended. Here we are overlooking the Essex House, everybody. So the JW Marriott Essex House. Now this particular hotel, it is a 5-star hotel, but it's not a modern hotel, okay? And I think I like it even more because it has that old school New York charm to it. It's absolutely gorgeous. The architecture is to die for. But speaking of architecture, I have to shout out one of our viewers. So listen to how crazy this is. I just found out the other day on Twitter that one of our viewers on Walks on Wall Street was one of the architects that built this building right here. 111 West 57th Street, or the Steinway building. And his firm actually helped design and architect this monstrosity of a building here on Billionaires Row. I think that's so unique. So shout out to you. And if you guys want to connect on Twitter, this is where, you know, we usually connect throughout the day, share ideas on the market and such. You could follow at Walks Wall Street on Twitter. And that's where I'll be most of the day if I'm not working. Okay, so Tom G says you build on granite, go down to solid rock all the way down, no matter the cost, till the hammer strikes, ring it, get it. Good to see you, Tom. The RT 440 says Waldorf Astoria is 1,049 feet. Central Park Tower is 1,550 feet. Love the Steinway building. Okay, so the Central Park Tower is gonna be a little bit taller than it. I didn't know that. Nirvana fan is like, Tom, when are you gonna confuse us and stream during the day? I think if I ever start to stream during the day, you guys should know that there's something very wrong. It either means I no longer have a job or my business went belly up. So hopefully we'll never be streaming during the day. Hopefully, thank God. I mean, knock on wood. But yeah, I usually stream at 8:30 p.m. You know, that's when I get off of work. So I think it plays in well. So now we're crossing 6th Avenue. You know, I'll let you guys decide. Should we walk down 6th Avenue or should we go all the way over to 5th? So I'll let you guys decide as I give you one more look at 57th Street. So should we walk down 5th Avenue tonight or should we go down to 6th? Brad's Brain, good to see you, my friend. Walk 6th. Racer says 6th. Ooh, Luna Lisa's votes 5th. It's 50-50. Dusty Cole, thank you. I appreciate you, my friend. So it looks like we're about split 50-50. All right, how about this? I'll give you the best of both worlds. We're gonna walk down 6th Avenue to Radio City Music Hall, and then we'll cut over to 5th. We'll make that compromise. Because I think you're right. I think we've been walking down 5th a little bit, but let's go 6th Avenue all the way to Radio City. We'll bang a left, and then we'll knock out 5th Avenue. And I think that's a good place to pivot because we get to see the St. Patrick's Cathedral. So I think, can we do that deal? I think we could close that deal. I think we just closed the deal. We'll do that. So another thing I wanted to talk about on tonight's stream is relative strength in this market, okay? And a lot of the times when I'm running screens to find out leading industry groups in the market, especially during bear markets, you'll have very blatant, sort of like eyesores, I like to call them in the market. And right now, one of the leading industry groups is solar. So you don't necessarily have to have, like a charting software like I use, like MarketSmith or Bloomberg. You could sort of do this research yourself. It may be a little bit more time consuming and cumbersome, but all you do is you just go to Yahoo Finance and you can sort of sort by, stocks reaching or near their 52-week highs. And usually the stocks that are showing the relative strength or that are trading near all-time record highs usually are trading there for a reason. So if we quickly review sort of the main criteria that I like to look for when I'm potentially going to make an investment, it usually looks something like this. So the particular company will usually have at least 5 of the variables that I'll go over tonight on the stream. And number 1 is earnings growth or EPS growth. And EPS stands for earnings per share. So what you want to see, I'll give you guys a view of AllianceBernstein. I believe on the 15th floor is the hedge fund Fortress Investments. But one of the things that you want to see is a company that is compounding out its earnings, at least quarter over quarter. You want to see EPS going up at least 25% quarter over quarter. Number 2, you at least want to see a company that is generating revenue of at least 25% quarter over quarter. Fantastic return on equity. Usually the sweet spot I like to look for is like 30% ROE. The higher the better, obviously. And very, very strong pre-tax and after-tax margins. So you'll notice all the stocks that have been hammered, right, especially as it pertains to the tech stocks, if you look at any of those metrics, they usually don't have that specific criteria, because at the end of the day, what drives price is earnings, right? At the end of the day, the stock price will normally follow the trajectory of a company's earnings. And that's why you want to only buy quality names. And right now, the market is extremely thin. So one of the particular companies, and this isn't saying go buy the company or anything, it's just sort of to make a point and have a conversation, but one of the particular companies I'm looking at right now is Enphase. And they are a solar company, and they pretty much have every single metric that I look for. So these are the guys that I was talking about. There's been a lot of accidents, unfortunately, involving these dirt bikes. So they definitely need to be safe while they're on them. I saw 2 accidents of people on those dirt bikes, and one of the times the guy wasn't even wearing a helmet. So please be safe if you're riding those dirt bikes to the city. So if you look at a stock like Enphase, and you guys could pull this up on CNBC, Yahoo Finance, whatever, or better yet, if you just go to their SEC filings and look at the 10Ks and the 10Qs, it has every single criteria that we look for, right? Explosive earnings growth, I think about 40% return on equity, great pre-tax and after-tax margins. And those are the particular companies that are going to lead this market, assuming, at some point, because we will, emerge out of this bear market. Very seldom do we ever have a time where the stocks that have been getting clocked that are down 80, 90% ever turn into the next bull market's true market leaders. It's usually the stocks that are going gangbusters right from the jump are the next true market leaders. And you'll notice a trend. We were outside of the Charles Schwab building, by the way. It is my personal broker-dealer. But you'll notice a trend. If you ever look at a company over the long term, like look at, Apple, any of the mega cap tech stocks that have been performing so well over this past decade, the number one thing that they have in common is explosive earnings growth. I'm not sure if Marcelo is in the chat, but this is the UBS building. UBS is an investment bank. Marcelo always likes us to pay a visit for here. And if you go directly behind on 51st, I believe is Mizuho, which is the Japanese investment bank. Shadow Shock says, tip ranks tracks the performance of investors that have published. No, I haven't looked at that. I'm gonna have to check it out though. I'll definitely look at it. The ABX girl says, Tom, there's been fatal bike accidents all over the place in North Carolina too. Dan Zhang says, hey Tom, natural gas futures went up more than 10% today. What do you think caused it? I'm not too sure. I didn't see that actually. Probably due to the Russia-Ukraine situation. Now, somebody in the chat made a really good point, Dan, about why Warren Buffett invested so much money into Occidental Petroleum. Supposedly they have quite the sizable nat gas business. But if I had to guess the reason for the spike, obviously the pipeline is still shut down to Europe. And as the winter, it may be a pretty cold winter. Brad's brain says solar is so unreliable though as an investment. It's always seemed to me so reliant on government, whether laws or intervention. Yeah, I mean, Brad, you're 100% correct. And I think that actually may be the reason why these stocks are showing relative strength. We talked about the Inflation Reduction Act, right? And regardless of if we like it or not, I think we need to think as investors, right? And sort of put our political opinions aside. So if the government is going to go all in on this ESG nonsense, our job as investors is, regardless of what the policy is, our job is to go in there and pull some cash out of this thing, regardless of if we agree with it or not. That's the investment business. So there's going to be massive subsidy to solar companies. There's going to be massive subsidy encouraging people to buy EVs. So I think that's why we've been seeing Tesla get a bid. So maybe, a lot of the money on Wall Street is sort of front running a lot of that subsidy and that activity. But at the end of the day, earnings speak for themselves. And it seems like that industry group, I think out of the 99 sectors that MarketSmith tracks, or the 67 sectors that MarketSmith tracks, renewables and solar is at the top tick. Now, that's also, Brad, and I think you could appreciate this. We're going to cross over here and I'll show you guys St. Patrick's Cathedral. But that's another reason why I'm very, very shifty on if the market has bottomed or not. Because usually when the market bottoms, it's not just one industry group that's leading everything higher. You usually have a more broad-based rally, right? Usually when the market bottoms, number one, you're not gonna wanna buy because there's gonna be some event that is so scary that you're gonna be so petrified. But at the same time, a lot of these stocks are gonna be taking off and going gangbusters. And that's exactly what happened in 2020, right? When COVID happened, I remember the S&P 500 was up like 450 points in a day. The Dow was up 3,000 points in a day. And everybody was so petrified, including myself, because of this virus. And nobody's gonna wanna buy. But when that market follows through, if you look back to 2020, almost every single sector, technology, energy, consumer staples, consumer discretionary, these names were roaring off the bottom. And that's not what we're seeing right now. So that's the only piece of evidence that leads me to believe we're gonna go lower here. But I don't know. That's just sort of one of my observations. Brad's Brain says, would you say that a lot of the movement is heavily government influenced right now? Maybe. I think probably. I think it's undeniable, especially this administration. If we're talking about the Biden administration, regardless of if you love them, regardless of if you hate them, at the end of the day, the policy that they're putting in place is to encourage all of this ESG and green energy, right? Regardless of if we agree with it or not, that's the reality. And I think a lot of money managers on Wall Street are positioning themselves and their investors for that reality, perhaps. Hey, Grand Street says, Tom, PSE&G, just let customers know natural gas prices will increase by 20%. Oh my God, that's crazy. 20% increase. Oh, it looks like they're shooting some type of a movie here. This is cool. Hey, Hellcat is here. Good to see you, Hellcat. Clarence Jackson says, I'm long alternative energy. Yeah, a lot of good ideas floating around in the chat. Austin City Limits. Tux Brown says, Tom, we're going to be in a bear market for a whole year. You may be right. Gail says, hey, Tom, what are your thoughts on the rail strike? So earlier on in the stream, Gail, I was actually asking you guys about that. Now, I'm not as well read on it, and that's really not my area of expertise, right? That's not really where ooh, this is a nice Tesla here. That's really not where my expertise comes in. I will say this, here's my piece, but I think there's many more people in the chat that are way more educated to speak on this topic than me. But here's what I think. If you think about, and this comes from a select few articles and research reports that I've read in Barron's, Wall Street Journal, etc. So essentially, a lot of companies are making the decision, especially as it pertains to fertilizer companies, chemical companies for like shipping chlorine, things like that. They're making the decision to front run a lot of this union bargaining agreement situation to shut down shipments already. Now, that is my concern, to say, is this going to be a prolonged activity where we could say, because obviously if we take a step back, one of the main reasons why food is going gangbusters right now is because if we've been paying attention over the last year, the cost of fertilizer has tripled. So if the cost of your, let's just say raw materials, if you're a farmer or something like that, goes up 3x, well, obviously the crops that you produce have to go up. So my whole thing is, if this freight strike or rail strike persists longer than, let's say, 30 days, I think it could have a material impact here, because I think the two main causes of inflation, aside from fiscal policy, aside from monetary policy, is the supply chain disruptions and shortages. And if our freight and rail is shut down, Well, that is going to put a wallop on supply chain. Now, I'm not too far in tune to know if the union's going to come to the table and get an agreement done within the next couple days, or is this really serious where people are going to be striking for 30 days or 60 days or even longer? That I don't know. It's happened before. So maybe it's one of those situations where we need to prepare for the worst and hope for the best. But I don't know. What are your thoughts about it? Mike C says, I don't think it will take 30 days to have a material impact. So you think it could even be a shorter time frame to make a big impact? Maybe you're right. Vonda says they are using Congress to bully the unions. Just give them weekends off and better pay. And look, Vonda, you could be right. I mean, you guys know me. I'm up front. I haven't really been well read into this particular aspect. Usually my expertise is software companies, and I'm not really too read up on the rail. But supposedly a lot of Amtrak is shutting down tomorrow night. Elliott Wave Review, my friend, good to see you. Says, Tom, you said you allocated 5% of Bitcoin because it's unconfiscatable, but what about physical gold, which is even less confiscatable? So my exact allocation isn't 5%. I won't give you the exact allocation, but it's higher than that. But gold is probably the most confiscatable thing on the planet. And I won't go into a big argument here, but sort of my thesis is, look, the vast majority of the world's gold is located right here at the Federal Reserve in Lower Manhattan. That's a pretty big trust you're giving to one entity, especially for multinationals. This is St. Patrick's Cathedral, by the way, to house your gold, especially if you're housing it at your house or physical gold. Somebody could break in and steal it. With Bitcoin, I literally memorize my private keys. That's it. I don't even have them written down somewhere. It's just memorized in my head. So if I ever forget my private keys, all of my Bitcoin is lost. That's the way I have it set up. So the only way somebody could access my Bitcoin is if they know my private keys. And the only person who knows that is myself. And I barely even remember it. There's probably gonna come a day where, I wake up 10 years from now and I'm like, wow, I have, $1 million worth of Bitcoin. Oh yeah, I forgot the private key. So, okay, let's hope that doesn't happen. So this is the beautiful St. Patrick's Cathedral. I'll tell you a quick story about the building directly behind St. Patrick's. So one of my good friends actually just got rented an apartment in the building directly behind St. Patrick's. And he invited me over to see the building. And he has the most unbelievable view I have ever seen. And I'll tell you why. Just let me pass this guy. The reason isn't what you would expect. It's not because you could see the Empire State Building. It's not because you could see the World Trade Center, which you can. What's even cooler, and I'll try to show you guys, obviously I can't show you because I'm on the ground level. What's so unbelievable is at the top of these two buildings here at Rockefeller Center, there's this entire outdoor patio space that I never even knew existed my entire life living in New York. And it just looks amazing. I'll have to post the picture on the Discord or something like that. But on these two buildings, so this one and the next one outside of 30 Rock, it just looks stunning. I'm gonna post it in the Discord at the conclusion of the stream, or maybe I'll post it up on Twitter, but it is just unreal to look at. And it is in this building right here. I believe they call this one, funny enough, Millennium Tower, not to be confused with the one in San Francisco. Yeah, Big Pick says people pay premium for New York City. That is true. I mean, the average rent now in New York is $5,000. The median rent, I think, is over $4,500 now. Denise Ebby says, Tom, the food industry got a raise from us to process theirs right now. That is how I look at it. Yeah, you know, passing on those costs to consumers. I agree. Hey, Christian Suarez is here. Says railroad workers are not upset about their pay. It's no time off. One guy said he was penalized for taking off for his wife's funeral. My God. So I have a follow-up question for that. And sorry I'm asking you guys a lot of questions tonight. But look, if there's ever a topic that I'm not too read up on, I'm a very curious person and I will hammer on it until I get the answers. So if we assume that they're striking because they get no days off, to me, I think the reason for that problem is because we have a labor shortage in America. And I think that's what's driving wages, right? So I think, what did we talk about, you know, the past couple weeks on the stream? We talked about if you're interviewing somewhere and the person who's interviewing you is pulling from a very, very small talent pool. And we know this because if we look at the labor force participation rate, I actually think it's more important to look at the labor force participation rate as opposed to the unemployment rate. So right now, employers are still hiring. They still have quite big demand for hires, but the talent pool is so small. So perhaps the reason why they're denied days off is because if they took days off, there would literally be nobody else to work. So that's a big issue, and I'm not too sure how to fix that, by the way. That's pretty concerning, actually. So Katie says, I think it's still recovery from the lockdowns. They are trying to play catch up. How long was the lockdown? It will take at least longer to catch back up. Yeah, I mean, think about that. And I think that just goes to show just how massive the global economy is, right? So if we think about a situation, hold on, let me show you guys. This is one of my favorite views here on Fifth Avenue, right outside Saks Fifth Avenue. You see these beautiful American flags here, love it. If you just think about how massive the economy is, and if you shut down the global economy for a year, it was pretty much shut down for a year. Maybe that's a little bit of an over-exaggeration, but if you factor in all of the zero COVID policy in China, the supply chain disruptions, the shortages, we were pretty much set back a whole year. I think that's fair to say. I don't think that's being over-exuberant or too emotional about it. And what has it been? Over 2 years now? And the supply chains are still not fixed and functioning well. And one of the reasons why we know that is we always, on the streams, we always cover, so the first business day of every single month, the Institute for Supply Management will release their Purchasing Managers Index, or the PMIs. So the first business day of the month, we always go over the PMIs. And if you scroll down to the bottom of that Purchasing Managers Index, the most important part of the index is the respondents, what the respondents are saying. And every single month since January, there's been complaints about the supply chain. They're like, demand is still holding strong, but shipping costs are going up because the supply chain is so backed up and so clogged. So I don't know how to fix that, honestly. I think we need some creative entrepreneurs to and consultants to come in here and better align and better streamline our supply chain. Now, I think the world is waking up to that. Oh, check out this view of the Empire State Building. Fantastic. You know, I think the world is waking up to that because, just as we've been talking about on the live streams, a lot of these companies, specifically as it relates to manufacturing, are actually ripping a lot of their precious manufacturing facilities from places like China and back to the United States, domesticating that supply chain so we could have more control. The problem is, if we think that's going to be an easy fix, it's not, because a lot of these manufacturing facilities that are being built in the United States are not even going to be completed to Q4 of 2024, if not roll over into 2025. So I think it's a start. You know, we saw Tim Cook rip a lot of the iPad manufacturing away from China. We saw Intel, Nvidia. I think NXP Semiconductor is building a factory here as well, Intel. So I think slowly but surely we are trying to address those problems. Glenn Shreen says, strange how when the federal government threatened penalties for containers sitting in the ports and not being unloaded, they got unloaded real quick without more employees. Katie says, we can't just bring back manufacturing after it's been gone for decades. Well, slowly but surely we are. A lot of the supply chain is coming back to the US slowly but surely. Ramirez says, my friend is a teacher and would like to start investing. Can you have any beginner book recommendations that you would recommend? I think the best beginner book is probably so I would read this book, and I'm blanking on the name, but it's by Jack Bogle, or John Bogle, the founder of the Vanguard Group. And I believe the title of the book is called Common Sense Investing. And I believe I put a link to the free audiobook, maybe. Oh yeah, I did. Yeah, so if you look, I believe Photos from Around New York. Hey, Gregory's joining. What's up, Greg? Hope you're well. Shadow Stocks is great advice, Bogle. Yeah, I mean, I think if you're starting off in investing, you obviously probably don't know the fundamentals of how to pick individual stocks. So I think it's appropriate, if you just want to get started, you could learn about indexing and index funds. And obviously Jack Bogle, unfortunately he did pass away, he was very old, but he did a lot for the retail investor on Wall Street, creating the idea that individual investors can get access to very low cost index funds that track the broader stock market. So the S&P 500, the NASDAQ, the Dow Jones Industrial Average. And the theory is, over time, corporate earnings in America will go up. There may be years where it goes down, there may be years where we're in a recession and corporate earnings take a hit, but over the long term, knowing that we live in a capitalistic country where we support innovation, we support a immigration system where we want the smartest and brightest minds from all over the world to come build businesses here. So long as that sort of integrity stands, I believe that corporate earnings in America will grow. And as corporate earnings grow, so should the valuations of America's best companies. So the theory behind, Bogleites and Bogle investing is just buy the overall broader based index. And if you look back, 100 years, the market has on average returned, 5 to 7%, which is pretty good. I think if your money compounds out at 7% every 10 years, it doubles. So that's a pretty good return to me. His3 says, just went to the link. According to YouTube, the link is discontinued. Oof. Yeah, so that was the free audiobook. A lot of times when people put up those free audiobooks, they'll take it down for like copyright. But look, I mean, if you go to Amazon, the book is like $10. Spend the $10, buy it, read it. But thank you for telling me that, Hiss. Hey, Gail Arnold says, ride the wave. Love that. Morris sees his Empire State Building nice. Destructionist says, how do you pull up the book list, Tom? I'm probably gonna have to redo the book list and put it on the Discord. Or if you guys scan the QR code on your screen, I believe in the 5th newsletter that I wrote. Ooh, see, that's what I mean, dude. You gotta watch out. Jeez. That guy almost got rocked by that car, man. So if you scan the QR code on your screen, it'll bring you to, I write a free investing newsletter, usually every other Tuesday after the market closes. I haven't written one in a while, but if you scan the QR code, punch in your email, I will send that to you. Now, we write about the US equity market, emerging markets, fixed income, as well as the housing market. And a lot of the times I'll put useful links in there, books, helpful links. So please scan that, punch in your email, and you'll be signed up to read it. Yeah, Dusty Cole's like, yeah, I saw that too. Yeah, if you're scootering or biking or doing this in the city, don't do that, because you're probably gonna get hit by a car, and it's not gonna be good. Yeah, Don't Kill Carrots is like Atomic Habits is a fantastic book. Atomic Habits is probably the book that I would most recommend reading if you want to be a more efficient person. I would read that 100%. Hey CR, says Tom, the newsletter is very informative. I pursued a few back issues. Well done. Many thanks. I appreciate that. You know, it's been very busy for me at work, especially going into end of quarter. But we will have new newsletters coming out. I promise. I promise. I promise. So it is a very windy night here, ladies and gentlemen. So let me know if you hear any wind noise in the microphone. We still do not have the mic, so we are flying blind here. Hey, Gail says, as a newbie, are you on daily? What is your schedule? Yes, so we go live about 5 days a week between New York City and Miami, and we usually start live streaming at 8:30 p.m. Eastern time. So right across the street is the Stephen Schwarzman building, the New York Public Library, one of my favorite buildings. And Stephen Schwarzman made the majority of his fortune doing LBOs, or leveraged buyout deals, on Wall Street. Most notably, the founder of Blackstone. All right, what do you guys think about this view? In the distance, we see the beautiful Chrysler building. And then if we go up even further, you'll see the One Vanderbilt building. Hey, Leslie is here. This is my old neighbor. Good to see you, Leslie. Rachel says, which microphone are you getting? Now, I'm not too sure which mic we're gonna be getting. I'm probably just gonna buy the same one that I had last time. But the problem is, so here's the thing. I don't think the problem is with the mic. I think the problem is with the little adapter to the iPhone. Does anybody really know what I'm talking about? If anybody has an iPhone, the lightning adapter is they break like every couple months. Hey, Kaka Silva, thank you so much for the 20 donation. I appreciate it. Says Tom, why do doomsday finance YouTubers get so many views? Well, I think it's all about copywriting. So you'll notice, and sort of we talked about this before, but you know, you'll notice that there's a lot of bad financial information out there, and quite frankly, a lot of these people have no idea what they're talking about, especially as it comes to a lot of the people who make videos about like buying the what's it called, the meme stuff, like the GameStop and all this AMC. It's all nonsense. For anybody who's either worked in the financial industry or just really just knows what they're talking about, the first thing they would advise is to stay away from all that junk. Stay away from the penny stocks, stay away from day trading, stay away from the Dogecoin and all the next hottest thing. Just stay away from it. But the market is driven by fear and greed, and the vast majority of people out there only want the answers. They don't want to put in the work. They don't want to understand how to evaluate a company. They don't want to understand market mechanics. They don't want to understand, what drives corporate earnings. They just want the next hot stock tip. What's going to go up 1,000%, and then they'll, throw all their money into that. Which sort of reminds me of, I think, one of the best interviews that was ever done. And if anybody read this book, it's one of my favorite books on investing. It's by Peter Lynch. And this always stuck with me. And what Peter Lynch said is, he said, people will go to the office, they'll sit around the water cooler, and they'll talk for 45 minutes to an hour about, what's the hottest stock you have? What are you investing in? And these people, just based upon a 45-minute water cooler discussion, will throw $250,000 or more, half their net worth, in a particular stock. But if they are interested in buying a new refrigerator or a new phone or, even a new leash for their dog, they go on YouTube, they watch so many reviews, they ask their neighbors, they go to the store, they interview the salesperson at the store. What's best about this refrigerator? What's the best thing? And they obsess over buying $1,000 item. But on a moment's notice and a little tip from the water cooler, they'll pour $250,000 into stock. And the reason for this is it goes back to psychology and the difference between intangible and tangible assets. Harvard Business School did a study that the majority of individual investors make more. Hey, don't touch me though. Yeah, but I don't like being touched. Yeah, fuck you too. That the majority of individual investors make money in real estate because it's more of an illiquid asset. Which means you can't log on to your Charles Schwab account or Interactive Brokers account and panic sell your house. But you can panic sell $250 million worth of stock in a second. Right? So the thing about intangible and tangible assets, stock, a lot of people don't understand you're owning a fraction of a business, right? You're literally owning a piece of the business, but you don't really interpret it that way. You inadvertently put more value on a refrigerator because you're passing by it every day. You're putting food in the refrigerator, you're using it, it's something tangible. So it just goes back to market psychology. So back to the question, why do more people will watch these, TikToks or whatever about the hottest stock to buy? It sort of goes back to that saying that Peter Lynch said, that more people put more prudence on doing due diligence into buying tangible things as opposed to, trading paper or individual stock, which I think is pretty interesting. Somebody says, Tom, what was that? Yeah, so I don't mind people coming up to me and asking me for money, but don't grab my wrist. I just don't like, you can't do a full-on wrist grab and turn me away. You could say, hey, excuse me, do you got $1? But if you grab my wrist and pull me away, I'm not gonna be too enthused. Hey, Techno Pink, good to see you, man. Nako says, Tom, put the hammer down, I like it. Yeah, I'm usually not like that. You guys can come up to me and ask me anything, or even homeless people can come up to me and ask me anything. But I just hate being touched by random people. Maybe if you want to tap me on a shoulder, but you can't like full on grab my wrist and pull me and say, hey, give me $1. That doesn't necessarily make me enthusiastic about exchanging monetary value with you. Hey, Kevin Ramsey, what's up, dude? Good to see you. So we're passing the Bank of China on our way down to 34th Street, Pennsylvania Station. But first, I think we'll stop at Herald Square. Yeah, all Spawn is like, I'll do that to my boss. Grab his wrist and say, give me a raise. No, Dan, I haven't heard of that. I'm gonna have to, let me screenshot that. So Dan Zhang is saying, hey Tom, do you know a channel called Finas U? This guy makes the best documentary for the most important people in financial markets. I don't, but let me screenshot that because I'm very interested in that. Knockers. Don't kill carrots. That's funny. Yeah, I mean, I have no problem with, people just coming up and saying, hey, you're down in your luck. Say, hey, you got $1, I got $2. Yeah, fine. Maybe I'll give you $1, but I just don't, especially if you're just full on grabbing my arm and pulling me in a direction. Don't like that. We'll walk down a couple more avenues, or streets, I should say, and then we should head over. Simpson says, what year were you born? So I was born in the great year of 1995. So I think 1995 is one of those weird years where you're not really a millennial, but you're also not really young enough to be a Gen Z. You're sort of like, you're sort of lost in the middle. So I don't know, shout out to anybody who's a 1995, 1996 person in the chat. I would consider ourselves the lost in the middle generation, not technically a Gen Z, not really millennial either. I don't really consider myself, but hey, Mike Skate TV says 96. Kel says 1995 here, love that. Hey, Will says, Tom, do you work for one of the bulge bracket banks? No, I sell, hold on one second. Just gotta avoid this. No, I'm in tech sales. So I sell software and hardware into the Fortune 500, Fortune 50 companies. So I'm in enterprise tech sales. Mike C. Yeah, Alfonso says it's a trash day. So I believe trash day in New York, especially in Midtown, is maybe Monday and Thursday. Yeah, so I think that we have a lot of new people here. So no, I do not work in investment banking. I sell software and hardware, other technologies into the large Fortune 500. And on the side, I manage a long-short portfolio. Mainly, the investment style is Can Slim, for those of you who are familiar with Investors Business Daily, IBD. And I think that's sort of given me an edge a little bit in my investing career, because throughout my sales career, I am very experienced in selling through the channel. Now, I'm not sure if anybody, maybe some of you are experienced with, go-to-market sales strategies by selling through the channel. So let's say if you are a SaaS company, or really any company, instead of having a direct sales force, you can actually outsource some of your sales force to VARs and MSPs. So in my day, I've sold anything from, Zscaler products, so cybersecurity, endpoint protection, zero trust type of cybersecurity, all the way to, SD-WAN solutions and traditional wireline, along with traditional mobility too. If you want to think about like devices that home health aides use to clock in and out, so like an EVV software, electronic visit verification, things like that. But during my college days, that's what I wanted to do. I wanted to, at the time, work in sales and trading, which is one of the departments in the investment bank. I didn't really want to do M&A banking, which I know is a lot more lucrative. But I found myself going into tech sales, and I kind of like it. It's been fun so far. I've met a lot of cool people. And I think the best thing I'll say about tech sales in general, especially as you move up the ladder to selling big, huge, sometimes $500,000 to $1 million deals, is you get to really learn about other industries, right? So if I'm doing a presentation for a CEO of a large hospital network, you get to learn a lot about the healthcare industry. If I'm presenting and working with, a big manufacturing company, you learn a lot about supply chain and logistics and 3PL. So it's mostly been a great way to build your network and to learn about other industries I would have otherwise not known anything about. Clee Shreen says, Shake Shack, my favorite. There isn't one within 2.5 hours of me. Wow. So I believe the original Shake Shack, now I'm not a big fan of Shake Shack to be honest, but I think the original one is in Madison Square Park, which is actually down this way. But I don't think we'll be able to go there tonight. But if you guys are enjoying tonight's live stream, feel free to leave a like on this stream and hit the subscribe button if you're new. We go live about 5 days a week between New York City and Miami, Florida. But check out this view here. This is one of my favorite views of the Empire State Building, lit up in the classic white. We are now on Broadway. 21 Jump Street says, hey Tom, are the best secure jobs in the US federal jobs? So, I'm a little bit, so the original thing that I wanted to do, which may have surprised a lot of you, I was actually going to be a police officer right here in the NYPD, but sort of as I built my network in the city, I sort of realized that there's a lot more lucrative opportunities out there. Now, I love, total respect, a ton of my friends are in the NYPD, but I think just for my personality, I need to be in a revenue generating role. So is the federal government very secure? Yes, I would say that. But I think if you're young, my advice would be you got to get after it. I would really, really get after it and try to pursue something a little bit more risky. Jonathan R., thank you so much for the $11 Brazilian. Thank you so much. Thank you for the support and thank you for watching the live stream. So I believe this time last week was the Brazilian Independence Day, wasn't it? So happy Brazilian Independence Day to all of our Brazilians in the chat. Yeah, Dan Zhang's like, Tom, plus you're too nice. As a cop, you wouldn't be able to arrest anybody. That's true, I couldn't. I just am definitely not cut out for that job, both physically and probably mentally too. Probably not cut out for it. Anonymous dude says, Tom, what's your favorite cop movie? So my favorite cop movie, and you guys are gonna hate this because this is gonna be the worst answer. It's 21 Jump Street. It's not really a cop movie, but it's like a comedy. I think that movie is hilarious. But I know you guys aren't gonna like that answer, but that's the answer I have. FredX says Tom is a crusader of justice. I think that's a little bit far-fetched there, FredX, but I'll take it. I'm not gonna reject that. I'm gonna take it. All right, so now we are at Herald Square. A lot of people out for a Wednesday night. Oh yeah, I believe there's a Harry Styles concert, I believe. Maybe that's just letting out. Mr. Wonderful is like heat. Funny. Oh my gosh, everybody, we've been streaming for 2 hours. How is that possible? So sometimes when we're streaming, I look down at the time. I usually try to look down at the time every hour. But tonight, I don't think I looked down at the time at all. Hey, scuba divers, like hello from Canada, good to see you. Oh, the LT prods were buffering. Yeah, I think as we get closer to Madison Square Garden, there's just so many people. I mean, Harry Styles probably sells out MSG every night. So there's probably gonna be a lot of network congestion here. Autumn Beauty says, when you first started your channel, were you nervous that people would look at you on the street? Oh no, not at all. So I think the best thing for me about that sales has taught me is I totally have like a rock solid skin. Like there has to be something pretty traumatic for me to get like embarrassed or deterred from anything. I think over the course of my sales career, I've made something like 15,000 calls. Faced rejection. I've presented in front of board of directors and where I've messed up so bad that yeah, I think just looking goofy holding a gimbal, you know, do some people troll me on the street? Yeah, I hear them in the background, but I mean, I don't really care. Hey Juan, thank you so much, my friend, for the 20 from Argentina. Hey, it says greetings from Argentina. Thank you so much. Shout out to all of our viewers from Argentina. You know, unfortunately, Argentina has been battling with huge runaway inflation. We talked about this 2 days ago. You know, if you want to look at the countries that have the lowest inflation, you'll see China, you'll see Japan, you'll see Korea, and the like. I believe all lower than 3% or lower than 4% inflation. Hey, we have a viewer from Korea. Good to see you. It says, hey Tom, 안녕하세요. Welcome. Enrique says, hey Tom, watching the stream on full screen on the smart TV from Brazil. Thank you. Hey, thank you for watching. I appreciate it. But team, we do have to call it a night. I appreciate everybody joining. We had a lot of good discussions about the looming layoffs, not only on Wall Street, but in the tech industry. Unfortunately, Twilio cut about 11% of their workforce today. We had a good conversation about how to find leading stocks on the street. We talked about earnings. We talked about earnings estimates. Yeah, we had a pretty good night. So thank you everybody for joining. Much appreciated. If you're new here, feel free to leave a like on the video. Subscribe to the channel if you are new. We will be back live tomorrow, 8:30 Eastern Standard Time from New York City. So we'd love to see you. So GX72, Autumn Beauty, thank you so much. Rachel, Fernando, thank you so much. Photos from around New York, Marcy, Fabricio, all of our moderators, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Make it a great day. Get after it tomorrow. Attack the day, and we will meet again tomorrow at 8:30. See you guys then.